Hello, welcome to the Boston Income Fund quarterly report for the period ended December 2016. I'm Paul Jones, the fund manager of the Boston Income Fund. The Boston Income Fund is reporting a return of 2.6275% for the December 2016 quarter, which is equivalent to an annualised return of 10.4243%. The official cash rate has remained equal to 1.5% over the duration of the December 2016 quarter. This follows a series of cuts to the official cash rate carried out by the Reserve Bank of Australia in the 2016 calendar year. The cash rate started 2016 at 2% and was then reduced twice by the RBA in increments of 25 basis points on the 4th of May and the 3rd of August 2016 respectively. As we advised in our last two consecutive quarterly reports, these reductions have had an impact on the return to Boston Income Fund investors. However, both the quarterly and annualised returns listed at the start of this report remain consistent with our overall targeted rate of return. A summary analysis of the minutes released from the monetary policy meetings held by the Reserve Bank Board during December 2016 quarter provide us with some insight into the state of the Australian economy as we move into the 2017 calendar year. Board members noted that there had been some large movements in financial markets following the outcome of the recent US presidential election, but they noted that these movements had been orderly and any increases in volatility had been short-lived. US Treasury yields, while still low by historical standards, also rose sharply post the US presidential election, reflecting sentiment that the policies of the new Trump administration would boost growth and inflation. Australian government bond yields rose and bond issuances by Australian banks were above average in both November and December 2016. In the process of arriving at the monetary policy decision to hold the cash rate steady at 1.5% in December 2016, the RBA considered the duration of the current easing cycle, which has lasted since 2011, thereby reducing the cash rate by 3.25% in time, as well as the rate of GDP growth post the mining boom, the existing level of inflation, and concerns about household debt levels. Think Tank Group Proprietary Limited has continued to perform strongly over the first two quarters of the current financial year. As has been the case in previous quarters, the level of new loan origination activity during December 2016 quarter has been solid. The total value of new loans written during December 2016 accumulated to a value of $69.1 million, with the monthly value of new loans written in each of the quarters, individual months, exceeding budget forecasts. Loan arrears within the Think Tank loan book have again been diligently managed by the company. Upon the completion of the December 2016 quarter, the proportion of loans in the commercial loan trust classified as being in arrears has been maintained around the level of 1%. Whilst this is definitely considered to be within acceptable limits, this figure is further considered to be a good result, given December quarter is a period in which many businesses experience cash flow pressures and slow or dislocated trade debtor payments. Overall, the management of the Boston Income Fund believes that the loan arrears at these levels do not pose a significant nor a material risk to the performance of the loan book in the near to medium term. At the completion of the December 2016 quarter, the total value of loans under management was $513.3 million across 800 loan accounts. In comparative terms, the value of the loan book has grown since December 2015 quarter by $132.9 million, which is an annual overall growth of 34.9%. The pipeline of potential new loans remains reasonably solid at the end of December 2016, which is an encouraging indicator for the remaining half of the 2017 financial year. As we outlined in a note to Boston Income Fund investors partway through December 2016 quarter, Think Tank has successfully settled their second commercial mortgage-backed securitisation, or CMBS, issuance. The transaction was stringently analysed by Standard & Poor's Global Ratings Agency and was quickly taken up by a combination of domestic and international financial institutions. Boston Income Fund is also a participant in Think Tank's newly established CMBS. Our involvement in the CMBS issuance means that Boston Income Fund investors will have units allocated across tranched and risk-weighted notes according to Standard & Poor's rating outcome. The Boston Income Fund's allocation within the new CMBS capital structure was fully deployed upon commencement, which avoided the need to have any portion of unit holders' funds allocated to underperforming instruments such as low-yielding cash accounts. Participation has resulted in a minor adjustment to the investor return profile for December 2016 quarter, but once again, this is well within our expectations. As always, if you have any questions about this statement, or if you wish to discuss your investment in the Boston Income Fund, please feel free to contact me on 02 8920 8886.